All right, good evening, everyone. It's me, Kelvin from Round and Search. So thank you very much for joining into our Sunday Market Prep. So it's good to see every one of you here today in the Sunday evening. So last week was really a good week, where ends with a good week, I would say. And actually, not just last week, 2 weeks back, it's also a good week, which we have been starting to make some of the good profit from the market. And what we're going to do here today, we will see what are the best trading method, and also what are the things that we need to be careful of in the market next week. So before we start, remember to give us a like and also share our video out to your friends or your trading buddies who you think that they are interested to look into this, so that they can learn more about trading in the Malaysia stocks market, so they won't get trapped into not to say won't get trapped, just have a lesser chance of getting trapped into it. And of course, if you like us and you want to follow us in this series of stock market, Sunday market prep, and also we have like day trading session or maybe the US market, remember to subscribe to our YouTube channel and our Facebook page. All right, so if let's say you're watching from a Facebook page, and remember there is a tipping session, the tipping function in Facebook, so you can actually tip us with the stars or to give us a little bit of support from there. All right, so okay, so what I've seen here from today, not from today, from 2 weeks ago, market seems like I think 2 weeks back I've shared with a lot of our followers over here, and also some of our students and some of my clients also. I told them like, okay, market is okay for us to move in for some of the short-term trade. Best is actually going for intraday trade, and we find that of course intraday trade we did have a profit from there, but not much. Okay, so I didn't really do much of the intraday trade, but for the short-term wise, it's actually quite good. So we will post the past 1 week result into our Instagram story. So if let's say you want to find out more, you can also follow us in our Instagram. So we have some of the infographic that for about tradings, and you can actually read it from there from our post. All right, so overall market right now, if you can see, let me share with you my screen over here. So the page over here is the one that is in the top active list, those stocks that is in the top active list. And last week actually ends with 1% higher, which is quite good. And also majority of the stock are moving up, like 580 is moving up, and it's only 279 that is going down. But even though the market seems very good right now, I think a lot of people are very happy with it. But still, the same thing I always share to my students and also my followers. Don't get overconfident or don't get too excited when you see or when you make some profit from the market. We have to be we always have to be very cautious. Of course, cautious wise is not just about being very careful moving in to hitting two cents of profit, then you exit, you take the profit or things like that. That is basically, it's just based on your own expectation to enter into the market, but not following the market. What we mean by cautious is that we need to look into the market, look into each of the stocks, whether they have the intention to continue to mark up the price. If let's say no, then we have to be cautious and then get out from it and see any other stocks they have the intention to move up higher. But of course, looking into the current market wise, I think a lot of people will be very happy, especially retail investor, when you come into it right now. I think start to have a lot of retail investors start to come into the market bit by bit, because they see like, wow, things are going up like 1%. The past 3 trading days is like 0.7%, 0.8%, 1% price moving up. So it seems very good. So it's getting a little bit more confident for the retail investor to come back into the market. But one thing I need to share with you guys is that you have to be careful, because retail investor, what we always do, if let's say you do not know, you don't really look into the market and you don't know how the big boys are actually works, you can you might be always enter into the market at the high price. So you will always ask like why I always enter into market at a high price and then the price could actually goes down lower. That is because you see the market is good right now. Right now, it might be some of the stocks they are attracting. They have already successfully attract some of the buyers come into the market, such as us, retail investor. So that's where they start to throw the price down lower. So this is why a lot of people they get trapped into it. And especially if let's say you follow the traditional analysis, then that is also one of the way that it trigger a lot of signals, entry signals and stuff like that. Then you get trapped into it. The reason is because traditional analysis is more towards like analyze the current stocks, what is their condition, what is the current stage, but it doesn't really give us the information of what is going to happen. What is going to happen is always like based on our own expectation, how far they can go, then it looks into that. But if you know about how the market works, how the stock market actually works, you know that all this can actually be some of the operations by the big boys. So they can create the resistance breakout, they can create a bullish reversal signal, they can create a candlesticks out to get you to jump into it. So that's the thing here. We are very different from the traditional analysis. We don't plot resistance line, we don't plot support line. So how do we see this resistance and support is we look into the 5-minute charts, look into further details, transaction data, the selling pressure, big boys, whether they are selling right now. If let's say they are selling, then we try to stay away from market. Why? When they are selling, we need to stay away from the market, because majority of the shares are the demand and also the supply are actually created by them. So that's why we need to follow them. Okay, all right, thank you for the like in YouTube, and also let's see whether we have any likes from Facebook side. Yeah, we don't have any likes from Facebook side yet. Okay, so give me a like. All right, so I've been sharing this, so give me some motivation on that. Right? Okay, so we're gonna look into it overall. What I see from the current market is that there's a lot of stocks that they have already moved up continuously a few days, moving up, but it doesn't seem like they have any intention to continue move the price up higher. Not to say that forever, but it seems like in a very short term there will be a retrace coming in, because we can see during the day from these stocks like 5-minute charts, at the end of the day there's a huge selling pressure actually comes in. So when the selling pressure is coming in, we know that the price might not continue to push up higher. So that's why you have to be careful with this. So this is one of the index stocks. So, but I'm looking at the top active list. The reason is because I want to see top active list. You can see the overall market. If let's say you look into the index like KLSE, you can only see like 30 of it, unless you are a person who trade like index structured warrant or maybe the futures. Then you can look into the 30 stocks of the KLCI. Okay, so that actually tells you, because that is the underlying asset securities of the what you call that, of the futures, okay, or maybe structured warrants. Okay, so looking at this same thing, there's a divergence in the price, even though there's a high volume push up. And then when it comes to here, the price doesn't move up much, but the volume is actually quite huge. So this actually show like quite a number of selling pressure are coming in. Okay. Oh, I see some reaction like from YouTube and also Facebook side. All right. Thank you very much again. So YouTube side is getting more. Still, we have more likes in YouTube. Okay. So our Facebook followers don't lose to YouTube side. Okay. Our YouTube subscriber. All right. Zen, I prefer trade US stocks rather than Malaysian market. It's okay as long as you are, whichever is good for you, you find comfortable. But for what if let's say you started from the trading US market, then you can follow with the US market. For Malaysian market wise, if let's say you don't have much of the experience to trade in the Malaysian market, then you and then you can't achieve a very good result from from Malaysia market, try not to jump into any other market, because Malaysia market is like a kindergarten site. So why I say that is because of the regulation and also the market size, and also all these big boys, how they move in and out is always the 1 + 1 = 2 kind of formula. Okay, so it's pretty easy. So easy of course, but one thing is that you need to know how, right? So like for example, I look into 5-minute charts over here, you can see more details. But if let's say you look into like daily charts, you seem like, wow, the price moving up higher, very high, so very bullish. So you might think like it's very bullish and you start to jump into it, or maybe you think like, oh, resistance breakout, so it breakouts with a high volume, so you might continue to go into these stocks. But we won't do that. The reason is because we're going to look into 5-minute charts, see this kind of price volume, how does it transacted. Okay, so from what we can see here, the high volume price push up, but then price back down lower. So a lot of high volume comes in, but price don't really push up higher. So why is this happening? Previously, at this point over here, we can see the lot of high volume are moving up, but at this point over here, the volume is about the same, but the price is not moving up. So which means that there are selling pressure are coming in, or either they are churning. They are seeing they have already reached markup to a point that enough of retail investors are coming in, so that's why they are not going to push the price up higher. They just continue to do a lot of transactions to attract, like let you feel that, oh, it's fear of missing out. There's a lot of buyers coming in, things like that. So usually this kind of price and volume pattern, how they do this kind of transaction pattern, usually the next day they mark up slightly higher and then they will start to throw the price down lower. Why they do that is because they push the price up higher in the morning, so retail investor will feel fear of missing out. So right now they'll jump into it. So jumping into it, they are not going in at the high price. They are not buying at the high price. They will park at the lower point, at the lower price, because retail investor always park their orders at a lower point, which I think is not a good idea to do it. Right, because if let's say the price are being thrown down from there, which means that the big boys are throwing the price down. They are taking some of the partial fraction profit, so they are throwing it down, and that's why you get the orders. So it's not about the when you are trading, it's not about the best price or best entry price or best exit price. It's always the best timing for you to enter in your market. When is the best timing? When is the big boys going to push the price up higher? When is the big boys are not going to push the price up higher and start to throw the price down lower? Then if you are able to follow this, you can enter at the very, very right timing and then exit at the very right timing at the very very near to the peak, nearer than the traditional analysis, where you set your own profit target. So that is your expectation. You are not following the big boss, right? Okay, so that is what we see over here. We can see a lot of stocks are moving up, but seems like selling are more are coming into it. But if we look into this kind of like more so-called a blue chip, so we don't really find that much of the transaction is showing signs that they were going to press the price down, or we have some selling volume over here. So, but of course the buying is still actually quite good. So I think they might continue to move slightly higher. So if let's say you're thinking of going in for a very short term, or maybe day trading for some of these blue chip stocks, I think it's actually, some of it you can actually do it, but some of it, if you see that there are selling pressure starting to throw it down, selling it down, then you have to be a bit careful about it, because you don't want to get yourself trapped at a high price again. Okay, so if you ask me whether it's a good time for you to move into long term, what I would say is, usually what I'll do is, let's say for example, I'll look for those stocks that they have like high volume when the price is at the very bottom point. This actually in showing sign of like the big boys are doing some of the accumulation in the market. But this one here, we don't. Okay, we have one of this, like this, something like this. All right. but after this we don't have any. So all these are when they push up, then only the price move up. So this is just an example. I'm not saying that this stock is good for you to look into it, just some example for you to see. So when I will go in for long term is I will wait for the price to move up higher. Let's say they move up with a high volume. Okay, when they are pushing up the price, there must be a high volume, and then when they have a retrace, then at this point over here we can look into it for a longer term holding or longer term investment. So always wait for the retrace first, then you look for the second time when they push the price up higher, then only we look into it. Okay, so that is, I think, the best point for us to look at it. Why I say this is because first thing, we need to see the big boys are coming into the stocks to do some of the accumulation. So if they do the accumulation, then after accumulation, they will have a quiet down period. So after the quiet down period, they will start to see, and then of course accumulation would not be just buying up higher and higher. Sometimes they can actually accumulate at lower and lower and lower. So until a point that they find that, okay, right now there's not much of selling pressure in the market, so they are going in, other funds are going into the stocks. So that's why you can see high volume are pushing up the price, and then of course until a point that you will see some of they will take some of the short-term profit. Okay, short-term profit. So that's why you can see the price are having a retrace. So when the price are retraced, if they still have the intention to go for long term, then the price will move up higher. That's why I would say, like, the second time. It's always the second time that we need to look into it. Okay, so the one that I shared just now, like how the accumulation and when is the best time to move in for a long-term investment. So these are mainly for some of the bigger cap stocks, blue chip stocks, or you can say those stocks that they have the intention to continue to push the price up higher. Okay, or increasing the value. I would say increase the value of their shares. So look into those stocks if, let's say, you want to find out to go for a long-term investment. So don't go into those stocks like they move up and down, 10 years kind of price. The price is just moving up and down about the same point. They don't really have much of the upwards movements. Yeah, something like this. Okay, so if you invest into this, you're not going to make much. Even though some of you might think like, okay, probably you look into it for dividend, but think of this. If, let's say, you bought this during 2008 time, let's say not at the high side, let's say we put it at about 6.5 ringgit. So the price actually from 6.50 ringgit down to 3 ringgit, and then move back to 5 ringgit. So you're still losing about like 1 ringgit and, let's say, 1 ringgit and 30 cents. So how many years of dividend you need to collect to cover back your capital, then you get your returns? So this is not dividend investment. Okay, so even though you are saying that you are dividend investors, you still need to look into capital gain. So don't tell me you are in dividend, you just look into dividend and then don't look into a capital gain. So that is not you won't make profit from the investment that you are making. So at the end of the day, the only thing, whether you are a value investor, fundamentalists, or traders, we are looking at capital gain. Okay, so there's no difference for me. All right, so yeah, basically right now for the market wise, I think you have to, for some of the bigger cap stocks, majority of it, they are showing signs that they are quite at the peak. So you have to be very careful into those stocks. There might be some pullback in the coming futures, right? So for these kind of stocks, I would just try to stay away because it's keep on churning up higher and higher. If, let's say, you know how to do intraday trade, then you can do intraday trade in these kind of stocks. But if you do not know how to do intraday trade, then you don't look into it. Okay, so like for us, for our members, we know how to do intraday trade, so we can find some of the stocks that is good, then we can move in for intraday trade during that day. We just make some and then we exit. Why we do intraday trade in this kind of stock that they keep on moving up higher and higher? Because this kind of stock, when they want to throw the shares out and then create a huge price fall, is very dangerous, right? So they can do something like this. I have some of the danger lists here. that previously they have done uh, they have done some of the churning stocks. So you can see from here, the price keep on moving up higher and higher and higher. Then volume are created very high. This was last time in 2019 time. So they can just one shot just press the price down lower. So you might think like, okay, this is pandemic, that's why the price are being pressed lower. But the reason why they are having this kind of churning is because these big boys in the market, they are using the limit and also margin to keep on shifting their shares. Okay, so basically they are relying on credits. They are buying a lot of shares but using credits. So T+1, T+2, T+4, T+3 is forced selling. So to avoid the forced selling, so they keep on from left hand change to right hand change to left hand, so they keep on churning on that day. So when the market is bad, why a sudden price drop in this is because Bursa, if let's say they have a limit cut, okay, the limit cut for all this margin account and all this, then they will have lesser margin in their hand. So they are not able to buy back that much of shares in the market. So what they have to do, no choice but to force sell. So a sudden price are being thrown down. So that's why I say, if you are going into this for short-term or maybe mid-term trade or maybe long-term investment, so these are not the stocks that we want to look into it, because it's very dangerous. But if let's say going in for intraday trade, then it will be okay, because just one price up, then you take the profit and run. So you don't hold overnight, so you won't get trapped in this kind of a sudden price fall in the market. Okay, so that's why it's very important for us to know when to apply the right trading methods, when to apply short term, when to apply intraday trade, when to apply mid-term trade. So when to actually move into a long-term investment. So by knowing this, whenever the market is down or maybe the market is moving sideways, so we can shift, you can change your trading styles. So then you can at the same time, because you know how the market, you know the big boys are getting out, so that you won't get trapped in falling stock price. So you are able to protect the profit that you have made previously. Okay, so you can see, if you let's say you have followers over a very long time, you can see most of the stocks, the last round of the price drop is not, we are not making any profit from it. We have a little bit of losses, but it's still able to have a profit from the previous trade that we made. So it's still able to maintain about around 3% per month. So it's good, okay, better than you're losing more than 3%, also total about 6%, and then you're losing more than 6%, losing like 20% of your value into it. So it's very important to know this. So all this thing is not just from learning from how the technical analysis or maybe the fundamental can actually tell you, because fundamental wise is only the base that tells you that these stocks, okay, they have cash flow, they have all these things, they have good and things like that. But this data, you can only access it, is not the latest one. It's always 1 quarter later. So you do not know what happened right now. You do not know what is internally, whether they get a project or things like that. Or maybe suddenly some union saying that they treat their staff badly and things like that. Okay, or maybe some of it talking about some of the missing funds in the company. You do not know that until they report it. So that's why fundamental is always the secondary thing that I look into it for, if let's say I want to look for a long-term investment. But the primary thing that I want to see is that whether the big boys can be the institutional fund, can be the director themselves, they have the intention to increase the value of their stocks. Okay, so like some of the industrial company, they will try to increase the value of their stocks, of their shares, so they can use this to acquire other company, their competitors, so that they can actually grow their revenue from it. So you need to really understand the true things about the stock market, is that whatever it is, even Malaysia, US, Hong Kong, everywhere, the whole financial market, the business of the company is one management, and also for the share price is another management. So basically they are two separate management. So the business of it would not have very direct link or correlation to the price movement. The price movement is always about the demand. Is there demand? Is there supply of the shares? So it's about the expectation of all these big boys. So you can see this very well in the tech industry. Not just tech industry, it's basically the financial market right now. So everyone is crazy, so many funds in hand, so they have nothing to, they have invest into Coca-Cola and then invest into all of the consumer product, and then they still have a lot of funds in hand. So what they do is that they try to invest into something that they can sell expectation, they can sell futures. So that's why you can future expectation, so innovation, so that they can use the future idea to boost, to write some story to boost the price up higher. So that is the case, even though you see some of the tech company are not making profit but still able to move up higher. Why? Because the big boys, the financial institution, are pouring money into it. So why they have so much money? Because the central bank are pouring money into the market, and right now they are trying to get all this money back from the market. So that's why you can see like a lot of stocks are, a lot of the stocks are not doing well in the market. Okay, the market seems very bad. All right, so same goes to this. You can see in the 5-minute charts there's a lot of high volume comes in, but then all this high volume is always at the high side, but it doesn't move the price up higher. So why is this happening? Because there are selling pressure coming in. Okay, so be a bit careful. Okay, so but it's not saying that totally you can't do any short-term trade. Short-term trade here, what I mean is that you hold lesser than 1 month. Okay, intraday trade means that you trade intraday. Right, so you can go for intraday trade, you can go for short-term trade. Mid-term wise, I don't think it's the right time right now, because like I say, most of it is moving up, but I don't see anything that is pulled back and then there's any high volume comes back into it again. And even though right now the market moving up, there's a little bit of demand coming in, but the demand is not really huge. Okay, so it's at least better than 2 weeks ago. So the some volume demand actually comes in, so that's why the price are being pushed up higher. So we do not know whether this demand is going to be sustainable or not. So that's why we have to watch and see, let them pull back first, and then we look back into it. Okay, so preparation for next week, basically short term, look for some of the stocks. You can go for short term or maybe intraday trade. If you're thinking it for to go in for maybe some of the long-term investment, then stay aside, wait for a while. So if let's say you are very versatile traders like us, okay, so right now you can do short term, and then when you see the timing is right, then you can actually move in for long term, right? So these are how you can actually do it. Okay, so of course be very careful into the market. Some of it, even though right now the price is moving up a lot, but you don't get yourself trapped at the high side. Okay, don't chase high. Basically, don't chase high. You need to know how. Okay, so if let's say you want to know more about our the how do we look into it? Okay, so we have is it this one? If no, okay, wait, let me share something to you guys. We have a coaching session. We have a coaching session that is coming on Wednesday night. If you want to see more details, it's in the Facebook page. The talks, we already pinned at the Facebook page site. Yeah, coaching session. Okay, so this one over here. So if you want to know more about this, you can actually find out how we can coach you to be traders, that you know when to enter for short term, when to enter the intraday trade, when is the market going to turn bear market, when is the big boys are going to push the price up higher, when are the big boys coming back in, when the big boys are going to sell the shares, or the market is going to crash. Then you can look into this. Okay, because I think the traders, every investor, every one of us, we need to have a coach, because you don't want to go through things like me. I have to go through all this alone. Then fortunate enough, I actually meet some of the seniors. They share with me, uncles, they share with me how they do all this operation and things like that. So from there, I finally know, oh, okay, this is how they do it. So that's how I gone through it. So you need to have someone to coach you, to know when to apply the right point, when to use this, how do you look into it. So it's like an athlete or maybe sportsman. You see, every sportsman, they have their personal coach. They know what to do next. They know how to maintain their health. They know how to maintain their mentality. So this is what we do over here. So we're gonna have the live stream on Wednesday, the coming Wednesday. So Wednesday night. So if you want to find out more, you can go to our Facebook page to find out on that. All right, and also you can register from the link in the Facebook as well. So is this a live stream? I think it's a live stream, but yeah, go check it out. All right, so basically that's the our sharing here today. So hopefully it can help you a bit in your trade on the upcoming weeks. So I'm not going to look into the individual of the stocks. So of course, if let's say you want to find out some of the stocks, things like that, you can always PM us. But I only do this for my own clients, so you can actually open a trading account with me as well. And of course, our training course, if you need a coach, the next training course will be coming out on August. So let us know if you want to find out more. We will have, you can do it a monthly subscription, so it's not a very heavy commitment for you guys. So from there, you learn how to do trades based on the live market examples. Then you can from there, you can see from our result, you can see from our review from our Facebook page, then you know like how our coaching session, our training course can actually help you. All right, okay, so thank you very much for joining. I'll see you guys again next week. And next week we have US market. We have also the Wednesday, the coaching session, and also we have the morning trade also. So see whichever you are interested, come and watch our live stream. Okay, remember to give us a like again if let's say you haven't given us. All right, and also subscribe to our YouTube channel and like our Facebook page. I'll see you guys again next time. Bye bye.
React to the market.